Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is a brand new trading week, August 12th today. We are going to take a look at a behemoth of a technology company here, Meta. I'm sure everyone is aware of this company, formerly known as Facebook, now Meta, and all of that it entails. Let's jump into the video. Before we get too far, if you could do me a favor and hit that thumbs up button down below if you find any value in this content. If you are a dividend growth investor, make sure you are subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button down below. Make sure you click that notification bell so you're notified whenever we put out any new content. We do the Stock Pick of the Day video series Monday through Thursday whenever the market is open. We take a look at a company like Meta that's pulled back on the day to see if it is presenting any value based on my screener. And make sure you drop a comment down below. Let me know what you think of Meta. I do not have a Facebook account, but I probably should create one at least for the channel so that I can get more eyes on the videos. Maybe I'll do that in the future. Drop a comment down below. Let me know what you think of Meta. Is it in your portfolio? Is it one you are watching? Is it one you are avoiding? Maybe it's one you're selling. It is up there as far as price per share. I know they were down significantly here a few years back. A lot of people jumped into it. They have recovered nicely, so kudos to any of you who were buying it back in the low 100 range and now have seen a huge run up in the stock. Well, let's take a look at it and see if it is potentially presenting any value today. It did pull back a little bit. Now, this is the Vested Interest stock screener. This is how I look at a company on a high level. It's how we're going to run through this video as well. Just because it meets 5 of 8 or 6 of 9, if it's a bank or a financial company like a insurance company, I add in price to book, then it would be 6 of 9. That does not mean I am running out and investing in the company. It just means it makes it into my watch list, and I do more of a deep dive into the company's financials, look at the balance sheet, the income statements, debt to equity ratios. I like to look at the PEG ratio, price to book. I also look at their assets over liabilities. Are their margins expanding? Is their revenue expanding? A lot of good information in the balance sheet that you should be looking at, and the income statements that you should be looking at as an individual stock investor. If you're not willing to do that type of deep dive, you should stick to ETFs. Warren Buffett would recommend something that tracks the S&P 500, so something like Vanguard's S&P 500 VOO, VOO, or SPY, SPY is another one that tracks the S&P 500. There's a few other ones out there. So if you're looking for just a set it and forget it, something you can dump in funds every week, like I said, Warren Buffett would recommend the average investor invest in the S&P 500 and just dump your money into it as consistently as you can. Now back to Meta. Check them out at their homepage, about.meta.com. That's ABOUT.META.com. That is their homepage where I pulled this information from. Our story, when Facebook, again, that's what Meta used to be called, Facebook, launched in 2004, it changed the way people connect. Apps like Messenger, Instagram, and WhatsApp further empowered billions around the world. Now, Meta is moving beyond 2D screens toward immersive experiences like augmented, virtual, and mixed reality to help build the next evolution in social technology. And you can see here at the bottom, this is kind of a timeline of their products, right? You've got Facebook, I believe that's Messenger. What is that? Instagram, WhatsApp. I'm not sure what this one is. Some others there. And you can go through their timeline. This is whenever they became Meta, I believe, right? So you could look through there and then you can see the apps that you could download, right? Meta, Facebook, Messenger, Instagram, WhatsApp, Workplace are some of their, that's what that one was, Workplace. I'm not sure what Workplace is. I don't use it. Again, I don't even have a Facebook account, so I probably should get one. Let me know if you think I should get a Facebook account for the channel. I don't even have a Facebook account for the channel or a personal one at that. I think my wife has one. And maybe my kids do, but I do not. I used to have one years ago, but kind of canceled it. A lot of the stuff on there was getting a little too political for me, so I got rid of it. But maybe I need to do one for the channel so I get more exposure. So that is what, it's a technology company, right? That's what they do. Their bread and butter is around technology. You can see some of their most recent, the next gen of Ray-Bans, smart glasses, There's the first market mixed reality headset is introduced. Meta AI. There's not a tech company out there that doesn't have something AI related. So that's the new buzzword. I feel like a few years back it was cryptocurrency stuff and all the blockchain. Blockchain was the big buzzword. Anything with blockchain associated. Right now it's AI. Back in the day, in the late 90s, early 2000s, it was anything with .com. So you go through those periods where the new buzzword comes out, and then every company has something related to AI. That's what it is right now. Now, the reason we're taking a look at them, down 0.35%. So not a big drop on the day, but a drop nonetheless. So we are going to take a look at Meta Platforms Incorporated, ticker META. Close out the day at $515.95. Looks like they're up slightly in the after hours, at least whenever I pulled this at almost 4:30 there. 52-week range as low as $274.38, as high as $542.81. So kudos to those of you who were buying it about a year ago even. You've made a significant return as far as price appreciation. Market cap of 1.305 trillion. So this definitely is a large cap company. A beta of 1.21, more volatile than the overall market. You can see that volatility throughout the day here. PE ratio, $26.36 per share. And that is really where tech companies like this should be. In the mid 20s is where they seem to be, right? Whenever you start seeing 30s, 40s, 50s, 60s, that's just priced with extreme growth built in. So I start to get worried about that. But this is not outlandish for a fast-growing tech company, which I think Meta still would apply. EPS, earnings per share, $19.57 per share. Earnings date, October 23rd there through October 28th, sometime in that window in October. Forward dividend is $2. They are a quarterly payer, I believe, though I think they've only had a couple payouts so far. Very low starting dividend yield on this, 1.39%. Ex-dividend date, June 14th. Looked like they pay out on June 26th, so they've already paid out that dividend. If you were to buy them now, you would be in line for the next dividend, though you're going to have to wait a couple months to get it. Now let's jump over and look at dividend yield theory to see if this one is potentially undervalued. And unfortunately, since they don't have 5 years of dividend yield average, that is not really going to apply here. Again, 0.39 current dividend yield. Their trailing dividend yield is 0.19, but again, they just have not been paying out long enough for us to be able to use dividend yield theory, so we're not going to use it. Payout ratio is very low, though. They're saying 5.12% here, so very, very low. That gives them a lot of room to increase this dividend over time. Now, let's look at the free cash flow here. We want growing free cash flow as a dividend growth investor. Typically, if a company has growing free cash flow, not only are they safe typically from a financial standpoint, but they also tend to raise their dividend along with that free cash flow growth. Going back to 2020 here, you can see $23 billion in free cash flow. 2021, big jump up to $38 billion. Now it looks like 2022, they had a bit of a downturn here to $19 billion. 2023, back up to $43 billion. So not consistently, but they are repurchasing their own shares as well. So you can see here, $6 billion, big jump up in 2021. So not only was cash flow up, their repurchase of shares was up as well, $44 billion. 2022, I am calling this a drop in free cash flow because not only did their free cash flow drop, but their repurchase of capital shares dropped as well. And again, back up in 2023, but still 19.7 in repurchasing their own shares. I like companies that are repurchasing their own shares. It pulls shares out of the market. It makes you more of a shareholder or more of an owner. You're owning more percentage of the company, even if you don't add additional capital. Now we're going to jump over to stockanalysis.com. The previous page was Yahoo Finance, and I always recommend more than one source for your information. That way you are making sure the information you are getting is accurate and up to date. And you pick any sources that you like. These are just two that I like. You can have different sources. I know Seeking Alpha is one that people like out there. Google has is a source as well. So pick any sources that you like. Just make sure you're not just blindly following one source. Sometimes they're not updated. Sometimes they are just wrong. Now, they have 39 analysts that have taken a look at this, and they call it a strong buy. And if you were to go to stockanalysis.com's homepage, you'd be able to click on these and see how many might call it a strong sell, a hold, a buy, or a strong buy. I don't think any called it a sell. Few called it a hold. Most were in the buy and strong buy range. But you'd be able to see how many of the 39 analysts would call it each one. They do have a low estimate of $350. That would be a 31.68% decrease from where it currently sits, and that would be a much better buy-in price with a much higher dividend yield if you were to get it that low. Average estimate of $556.10. That would be a 8.55% increase from where it currently sits. and a high estimate of $647, which would be a 26.29% increase. All the while, you could collect that small dividend yield that they are paying. We're going to jump over to statistics and see how well this company is reinvesting its capital back into itself, and they are reinvesting a significant portion trying to build out their 3D spaces, I guess you can call them. So I know they are reinvesting a lot of capital back into the company. Now, I like 10% or better for return on invested capital and return on equity. Return on equity sitting at 34.2%, very nice. Return on invested capital sitting at 25.83%, very nice. So they get a check there from me. EPS growth forecasted over the next 5 years. I like 5% or better forecasted. They're at 16.63%, very nice, with revenue growth forecasted at 12.52%. That is awesome. Double over 10% revenue growth is very, very nice to see. I should add revenue growth maybe as one of the metrics I look for. Dividend yield is 0.39, so again, very low dividend yield. Annual dividend $2, ex-dividend date June 14th. Quarterly payout ratio, they're saying 10.25%. This is why I like to look at more than one source, because Yahoo Finance had it at 5%. So somewhere under or around 10%, under 10% is where they're at. They do not list dividend growth yet, but again, they have not been paying out very long. Buyback yield of 0.08, shareholder yield of 0.46%. They started paying in February 2024 here, paying 50 cents. Paid again in June, 50 cents. So I would anticipate another 50-cent payout. We will have to see where they're at in dividend growth. Now, I am anticipating that they will grow dividends over time. I just don't know how often they will do it. Once a year, hopefully. If you're a shareholder, that's what you'd like to see. Or at least I would if I was holding this. I do not own this company. And let's jump back over to the vested interest stock screener to see how this one shakes out. So understand the business. That's where we started, right? They're a tech company. They're involved with a lot of social media stuff, but also in the, like I said, the 3D space, the VR goggles and that sort of stuff. Growing free cash flow. They had the one down here. Growing dividend, we don't know yet, so no check there. I mean, if you were to give them a check with anticipation that they're growing dividend, I mean, I really wouldn't argue with you, but right now they don't have a growing dividend. Payout ratio definitely below 75%, whether it's 10 or 5%. Check valuation based on dividend yield theory. Can't use it, don't have 5 years of data to look at. So this actually does expose some of the downside to this particular screener, because you have to have to use dividend yield theory, you need 5 years of data for a company to have paid dividends. So it's not really good screener for companies that have been paying less than 5 years of dividends, right? At least according to dividend yield theory, you wouldn't be able to use that one. Buy below current cost basis, it is not in my portfolio, so it is not below my cost basis and is not even close to within 15% of a 52-week low. Return on invested capital and return on equity, both better than 10%. Earnings per share growth much higher than 15, over 15% or over 5%, so over 15% actually. So check. So 1, 2, 3, 4. Unfortunately, only 4 really, right? So it does not make it onto my watch list. If it was to pull back significantly within 15% of a 52-week low, then it would. But right now, it is not on my watch list. It would not pass the screener to make it onto my watch list. Let me know what you think of it in the comment section down below. Well, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Meta you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below, and I'll work it into the rotation on the day it pulls back. And I do have a couple other ones out there that subscribers have requested, so I will work those in hopefully this week or next week. So tune back into those videos as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.